Hello everyone, this is Satish Kumar. I am here with my continuation lesson on Indian economy on non-performing assets. So, in my previous lessons, we learnt about what is non-performing asset and why it is rising and what are all the impacts of or the effects of non-performing asset and who is a willful defaulter. We also learnt about some steps taken by RBI and government to solve the NPAs. So we haven't completed all the steps taken by the government. So in this lesson we will see the balance. So another thing is the RBI in 2002 took another step to solve the NPAs, that is prompt corrective action. Okay, so see, most of the steps that we saw earlier are all steps that are post-mortem in nature. That is, after the NPS has happened. Okay, but what about preventive measures? Okay, see, a bank will show certain signs of stress and initially, and then it will finally become a NPA producing bank. So if the bank at the initial stage, when it's showing some stress related to NPAs, identified then and took measures accordingly to that bank, no, then this kind of NPAs will not be keep on rising for that banks. Okay, at present we see some banks have incurred so much of created so much of non-performing assets. So there should be some monitoring done to them, so that identifying them whenever they are showing certain stress and making corrective action then itself. That is what prompt corrective action is. It is a preventive measure. Okay, RBI has introduced this in 2002 itself. Okay, see, this is a mechanism for banks that became undercapitalized due to poor asset quality or vulnerable due to loss of profitability. So if suppose a banking sector, any bank is not well capitalized or its assets are becoming poor quality, it's showing net performing asset, or the bank is not making any profit. Okay, in such case, these kind of things are considered as the weak financial metrics of bank, and these banks will be put under what is known as prompt corrective action by RBI. Okay, RBI will identify these banks and they will be recognized as they are under the PCA framework, that is a prompt corrective action framework. Okay, so the three major things under which banks are tested, three parameters are: first is the CRAR, the capital to risk weighted asset ratio. Okay, the second is net non-performing asset, how much of non-performing asset that the bank has, and finally what is the profit that is the bank is making, the return on assets. Okay, if it shows sign in any three of this, that is its capital is not, CRR ratio is not sufficient, if there is too much of non-performing asset, if the return on investments, return on assets or the profitability of the bank is not well, or the bank is making losses, in such cases those banks will be identified and they will be put under the prompt corrective action. Okay, see here, please note that India in RBI in India, Indian Central Bank RBI has put these three parameters, but all over the world there is only one parameter, that is the first parameter, that is a capital to risk weighted asset ratio is prescribed in the case of for the bank to for prompt corrective action. Okay, suppose if the bank is not having sufficient capital to its risk weighted asset ratio, no, then only the banks are put under the prompt corrective action. But in India, we have additionally two other aspects also the RBI has include, that is the net non-performing asset, that is if the bank is having too much of non-performing asset also it will be put under prompt corrective action. Then the third reason is also there, that is the profitability of the bank is not sufficient, or the bank is not making enough profit, or the bank is making losses, no, even in such cases banks will be put under the prompt corrective action. See, this is a contentious issue between government and RBI. We will see that. Okay. So the major purpose is so that it will help alert the regulator, in fact especially RBI. Okay, and RBI by alerting all of the people that the bank is going to, so the investors or the depositors all will know that the banking is heading towards a trouble. Okay, so the idea behind this is to avoid any future problem, so that the bank will take necessary steps. If a bank is put under some criteria warning or alert signal, the bank is also asked to follow certain guidelines, so that they will be prudent and they will not make any further mistakes. Okay, that is the idea behind PCA. So the RBI monitor key performance indicators, and it will also ask them to take corrective measures to restore the financial health of a bank. Okay, so we saw that RBI look under the three factors. Okay, RBI will suggest certain measures, corrective measures to restore the financial health of the company. Okay, please remember the prompt corrective action is applicable only to commercial banks and not to cooperative banks and non-banking financial companies. Okay, initially it was set like that. Okay, only the commercial banks are put under the non-PCA framework. Since cooperative bank, their purpose is different, no? So their purpose is not about profitability. So if those things also put under the prompt corrective action, it will not be right, because the prompt corrective action will also have return on assets criteria, no? So that will not be the correct way. So that is why the cooperative banks are not put, and also non-banking financial companies also not put under the PCA framework. So what are the things that RBI will restrict, or RBI will take the different measures to improve that bank that is incurring losses or put under the prompt corrective action. So the RBI will place restrictions on dividend distribution to these banks. Okay, because it is already showing stress, they will ask them to stop, or they will ask them to provide only reduced level of dividend, like that. Okay, then they will also restrict them on branch expansion. Since they are already facing trouble, RBI will not provide them with further expansion. Okay, or restrict further expansion for too much of expansion, right, like that. Then it will also restrict them on increasing the management compensation. Okay, so these are all the areas RBI will place restriction, and these are all taken initially. In fact, when the prompt corrective action is put on a bank is put under the prompt corrective action, these kind of steps will be taken, so that they will expect the bank to recover. But even after putting under the PCA measure and taking all this action, still if the bank is incurring losses, no, then the RBI will go into the extreme situation. It will go into the resolution like amalgamation. Okay, in fact we recently saw that a lot of bank amalgamated, and one single Punjab National Bank was created by merging 4 other banks, right? We saw those things, no? In fact over 2 of those banks were under PCA. Okay, making losses, or even considering winding up. Okay, they will consider of amalgamation or reconstruction or winding up. That all these things will be taken under extreme step when the bank is not able to recover if any steps is taken. Okay, please remember earlier before this bank mergers, when there was some 22 banks, no, at that time nearly 11 banks were put under the PCA measures in India. 11 banks, 11 public sector banks. Okay, and at present only I think 4. It is reduced or not, I know. In fact, this is my knowledge to recent memory. 4 banks are under prompt corrective measures action. You also check whether it is 4 or if there is any increase or decrease. Okay, I think it is 4. Okay. The RBI will also place restriction on these banks that are put under the prompt corrective action to on its credit. Okay, it will not make them to completely ban lending to other lending, but it will not allow to lend to unsecured borrowers. Okay, or borrowers with high risk or borrowers who have previously defaulted. Okay, previous history of default. So bank again here also will put restriction. One of the biggest problem in Indian banks is banks have repeatedly given loans to people who have defaulted, okay, in the hope that they will recover. Okay, that is called evergreening of loans. In fact, that is a huge problem for banks, and that is why the NPAs, even after taking measures, are keep on rising, because bank are providing further loans to people who are already created or who already defaulted. Okay, so RBI will place restriction on banks that are put under the prompt corrective actions to lend, okay, to lend to certain people. So it will not completely ban. Okay, and then the RBI will also impose restriction on these banks to borrowing between the interbank. Okay, we learned in the money market that is called money market, which is interbank borrowing. Okay, bank borrow between interbank for to meet their financial needs. No, RBI will also put restrictions on banks that are under PCA to borrow between interbank. Okay, so there will also be some restrictions, and also banks, these banks which are under the PCA, no, they will not be allowed to enter into new lines of business. They cannot start any new services like that. Okay, so there will be lot of restrictions put under the PCA measures. But remember, when an RBI puts something like this, no, it is going to affect, of course it is going to recover the bank, or not will not the bank will not further deteriorate. That benefit is there. But there is also another side effect to this. Okay, that is the bank's profit will further decline, because a lot of restrictions are done here, because banks are not allowed to lend to large. There is too much of restrictions on lending. There is too much of restrictions on borrowing to meet their needs. There are restrictions to include new services. So all this will affect the profit, and above all, putting a warning sign on the PCA, no, it will also affect, because since it is put under PCA, no, borrowers may not trust that bank, or the people who are depositing through the bank will not trust the bank. The customers of the bank will not trust the bank. So they may take the deposits which they even deposited earlier, because they may think that this bank may go to bankruptcy. So that is also the problem there. Okay, so that is why there is a conflict between the government and RBI regarding the PCA. Okay, so the government says that PCA should be an exceptional, since PCA is an exceptional action, it will impact the ratings of the bank and also the consumer confidence. Okay, whenever a bank is put under prompt corrective action means it is a warning signal that the bank, that they may default, bank itself will default. So the customers who are deposited in the bank will be wary of keeping the deposit in the bank or further depositing in the bank. Okay, so this kind of problem is there, and it will be detrimental to the bank in the long run. Okay, and this will also accelerate the further profitability of further market share improvement of that bank. Okay, in fact, if the previously the bank is even performing at certain level, that might decline because of the bank is put under the PCA. Okay, so generally the government views this PCA as a process that is hindering the economic growth. Okay, so finally the bank will not lend large amount because of the actions taken by RBI to these banks. But RBI also don't want the bank to fail. Okay, so this is the conflict between Government of India and RBI. Okay, in fact there is always a conflict between Government of India and RBI, and this kind of conflict resulted in what is known as RBI's autonomy and government's wanting to control RBI. Okay, in fact I will put a separate lesson on RBI's autonomy. Please watch that lesson in which we will discuss all things about that. Okay, whether RBI has total autonomy or only functional autonomy, like that. Okay, so the government says no. See, all over the world there are only, we have seen earlier in the which are all the banks will be put under the prompt corrective action, that there are three parameters in Indian case. But in that three, only one is all over the world. In fact, all over the world the central banks put only one condition to put the bank under the prompt corrective action, that is the, if the bank fails in the prompt capital to risk weighted asset ratio. But in India there are three criteria or three parameters. So a lot of banks are put under the PCA. So government is saying that RBI also should follow the international practice of only taking the first parameters. It should not take three parameters. Okay, in fact government feel that this is impacting the economy, it is impacting the bank's ability to lend, it is impacting the bank to earn further. Okay, so it is having an overall impact. So that is a clash between bank, Government of India and RBI. Okay, please remember this point. What is the, so we have seen what is PCA and what is the conflict between bank and RBI. Now we will see another very important measures taken by government. This is taken by government in 2015, what is known as Mission Indradhanush for public sector banks. Okay, this was launched as a very comprehensive plan to reform public sector banks. Okay, to revamp the functioning of public sector banks, so that these banks will compete with the private sector banks. Okay, will have a competitive, equally competitive like a private sector banks. Okay, and it is seven components plan. The 7 components, because the name Mission Indradhanush, no, it means that it is the color of rainbow. Okay, so 7 colors, that is why the name Mission Indradhanush was given to it. Okay, and the aim of this mission is, major aim is to reduce the political interference in the functioning of public sector banks and improving the credit in the market. Okay, one of the biggest problem for banks is, since they are a public sector banks and it is government controlled, lot of political interference in the public sector banks. So in 2014 there was this committee called PJ Nayak committee, and it gave some recommendation. In fact, I have given what are the recommendations of PJ Nayak committee in my banking reform lessons. So you know that what are the reforms it is said, and based on the PJ Nayak committee recommendation only, this mission on Indradhanush was introduced by government. Okay, in fact, the majority of the themes in the mission Indradhanush are based on the PJ Nayak committee. Okay, on banking reforms. Please remember these kind of points. These are all prelims, very important questions. Okay. So the 7 components of the mission Indradhanush is given this abbreviation of A B C D E F G. A B C D E F G 7. Okay. So as per the alphabetical order. So each one will represent one point. Okay, one parameter or one component. The first A is appointments. Okay, appointments. So here the government has decided that the appointments will be similar to the global best practices and as per the guidelines in the Companies Act. That is, there won't be any excessive concentration of power. Previously, there was this post called CMD. Okay, chairman and managing director, at a single person is doing both the job. So the government took the first step to separate this function of chairman and managing director and having 2 people for that. Okay, so that there won't be any excessive concentration of power. Anywhere if there is excessive concentration of power, that it will corrupt. Okay, that is why the reason for balance of power is there. Okay, so this practice was taken. Okay, and most of these people will no longer be appointed. In fact, these people will no longer be appointed by government. One of the aim of this mission Indradhanush is to reduce the political interference. So appointments will be based on merit and integrity and other consideration rather than spoil system of government introducing. Okay, the second factor is B or Bank Board Bureau. So as per this mission Indradhanush, a new bank board bureau will be set up. Okay, a new bank board bureau will be set up, which will replace the previous appointments board. In fact, the previous appointments board is what setting, selecting and appointing authorities of, in fact, for all the managerial post of all the public sector banks. And in the previous appointments board, there was too many government interference. Okay, so now what is the government is proposing is, it is setting a new board, bank board of bureau, and it will have the purpose of appointing all the important personals of the banking sector, that is the top executives level, like directors, chairman and all the things, and they will be autonomous from the government. They will have what you say, free hand. So the appointments in the future will not be based on the government interference. Okay, and apart from this, they will also advise the banks in matters of how to raise fund, whether to merger or not, like all other things. Okay, and they will also hold the bad assets of public sector banks, the bank board of bureau. So this new board is considered as a major step in the banking reform of India, in fact, to solve the NPA. Okay, then there is also this C for capitalization. Okay, again, banks are incurring losses, they are having huge high NPAs, and as a result they may fail in the future if Basel III norms is introduced. Okay, so far Basel III norms is not introduced. In fact, as per the Basel III norms, we said that we will introduce in 2019, but we delayed it for certain reason, and suddenly we got into this COVID, and it is keep on dragging. Okay, so far it has not introduced, but if tomorrow it is introduced, it will show the banks will find it difficult to meet those norms. So in order to make bank strength, government has spending or infusing fund into the banking sector. It is capitalizing banks. In fact, I think few months back or 1 year back, I think our government introduced a lot of money, like 70,000 crore as capitalization to the bank, so that they will have better capital. They also solve the NPAs related issues. Okay, so that is the third part. The fourth is what is known as de-stressing. Okay, so what is this? One of the biggest problem for banks NPAs is, in fact, in recent time, the cause of NPA, the rise of NPA is because the people who have bought the companies who have borrowed, no, for most of them for infrastructure projects like that, no, their project got stalled. As a result, they are unable to repay the loan. Okay, so the government is taking steps to solve that side of issue, the company side of issue, like why infrastructure problems are there, that is not getting clearance, companies not getting clearance, companies facing environmental related clearances. So government policy is that to facilitate the project implementation, that is the project gets carried on. Okay, and all the respective ministries are asked to facilitate this, to so that the project will not get delayed, so that it is de-stressing, so that the companies will start to make profit, so that they will repay. Okay, so this kinds of steps also they are taking. Further, they are also taking steps to restructure the existing loans. Okay, and they are also setting up further debt recovery tribunals, like 6 new debt recovery tribunals are to be set up by this mission Indradhanush. They set up. Okay, and they are also planning to develop a vibrant debt market for public sector bank. See, India, the public sector banks, companies are still relying on public sector banks, whereas in other countries there are variety of debt market like securities market. We also learnt about those things. Okay, in fact, the securities market is very important to relieve the stress of bank. See, if everybody is relying on bank for lending, no, bank will have huge problem. But if the companies will have other avenues, they will not go to bank regularly. So the bank will also be relieve those pressure. So these are all the de-stressing process that are taken by government. Okay. Then there is empowerment, E for empowerment. Okay, so the government, as per this said, no, they won't interfere in the bank, and the bank will be encouraged to take independent decision. They are empowering the bank. Okay, so that the bank will take decision which is good for their commercial and the organizational interest of the bank. Okay, and the government will also promise to provide greater flexibility in hiring manpower to banks, so that bank will hire people who are with right quality. Okay, so the bank are empowered to work as to get independence and to work for their commercial and organizational interests. Okay, then there is F, framework of accountability. Okay, so here bank will be assessed based on certain key performance indicators. So the bank also should be accountable, so that there are some quantitative and qualitative key performance indicators by which the bank will be made to given accountability. That is, whether they are having non-performing asset management. The non-performing asset management is whether it is correct or not, whether the growth and diversification, whether they are making enough return on capital, whether they are doing financial inclusion, they are lending to more people. One of the biggest problem for Indian banks is They are willing to lend to corporates, but they are not willing to lend to small and medium and other sections like agriculture and allied sectors. As a result, we see a lot of discrepancies in the sectoral lending of bank. And financial inclusion is that every sector should get some access to finance, so that bank should work towards that. In fact, the people in this sector will not default like the people in the corporate sector. Okay, so financial inclusion is there. Then it's also whether the asset quality, whether what are the kind of human resources. Okay, and they will also vigilant keeping some vigilant process on bank, whether any major frauds are happening, whether the staffs, that is the managerial of staffs, no, they may take commissions from companies and they will give loans without having sufficient collateral. This kind of things are all happening, no. Everything will be vigilant. There will be vigilance. Okay, all this will come under the framework of accountability. So the bank also will put under the accountability. Then there is this seventh reform, that G for governance reforms. Okay, so that here, in fact, in 2015 there was this thing called Gyan Sangha was organized, where it is a conclave of public sector banks and other financial institutions to assemble, and here they will have some discussions. Okay, these kind of forums will have conclave and forums, no, where they will discuss about how to reform the government, what are the steps can be taken. In fact, this kind of reform, it is a platform for idea generation. In fact, the 2015 Gyan Sangha was held at, and they came up with 6 different topics they discussed, and how to optimize the capital of bank, how to digitize the process, how to strengthen the risk management, and how to improve the managerial performance, and also financial inclusion. So this kind of forums will be continuously held, and banks will be discuss and come up with ideas, for that banks are will reform themselves. Okay, so these are all the major things in the mission Indradhanush. Very very important. Please try to learn about it more if you get any point, and how it is functioning at present, and what are all the pros and cons of that. All those things please learn. Okay, then this we have already seen in the previous lesson. Say in that one steps taken by the for recovery of NPAs is setting up of asset reconstruction company in the SARFAESI Act. But we saw that private ARC had certain problems. So the government in 2017, the economic survey, it said that there should be public ARCs known as PARA, Public Asset Rehabilitation Agency. In fact, they said it is even known as bad banks. Okay, so that a public new institution will be created, Public Asset Rehabilitation Agency or bad banks. This will take care of all the NPAs of publics, all the different public NPAs. Okay, in fact, all the public sector banks NPAs will be clubbed under this bank, and this one institution will take care of it, so that the bank will be relieved of the NPAs pressure. So since this is a public institution, government will fund this, but government didn't say where this fund will come, and government, as per economic survey, proposed this. Government also planned it, but yet now nothing fruit came about it. In fact, there are different pros and cons related to this bad banks. I will recommend you to learn all those things. Okay, for example, a bad bank, having a bad bank is kind of what you say. See, you want to relieve the public sector bank, but the public sector bank has created some cash, and you want to relieve yourself and take the pressure on yourself. Okay, so that is also the bank should have some responsibility. They should shoulder it. Okay, it is just relieving their pressure. and taking government all the burden by this bad bank. Then there is also whether it is viable. Okay, in fact, our previous governor Raghuram Rajan has criticized the idea of this bad bank, saying that it won't work. Okay, so there are pros and cons in this argument. In fact, these kind of questions will be asked. I'll put a separate lesson on this. Okay, the pros and cons of bad banks. That is the PARA, Public Asset Rehabilitation Agency. Of course, it is not yet created. In fact, there are still discussion going, debate going whether India should go for bad banks or not. Okay, please remember this point. Finally, we have the insolvency and bankruptcy code. I will give this in my next lesson. Okay, we have tried at best to shorten all the lessons so that it will be easy to comprehend. When we learn too much at a single space, no, we will get stuck. So it is better to break into parts. That is why I am going to give the insolvency and bankruptcy code itself a nearly 15 minutes or 20 minutes lesson. So I will give that in my next lesson. Okay, bye.